Hello and welcome to this session in which we will work the CPA exam simulation. This simulation you might see also in an auditing course as an exercise. Regardless whether you are a CPA exam candidate or an accounting student, knowing your management assertions is extremely important for your class as well as for the CPA exam. Now in the CPA exam you might see this exercise, and this will be, for example, a drop-down menu where you would select whether the assertion is an account balances assertion or classes of transaction, then the name of the assertion, maybe you will have several of them, and you will select one of the assertions. Now the assumptions here is you are familiar with the assertions. We're going to go ahead and work this exercise under the assumption that you understand your management assertion. You already looked at my lectures. You understand, now you are practicing. If you want to go ahead and pause this before we start, please do so. On the next slide, I have an additional 6 assertions, and you have to determine whether the assertion is an account balances assertion or classes of transaction and the name of the assertion that we are dealing with. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
The first assertion, confirm that recorded account receivable actually exists. Well, we're dealing with account receivable, and account receivable, is this account balances or classes of transaction? Well, receivable is an account balance. It's a balance sheet account. What's the name of the transaction? I hope you can derive the names from the actual assertion, that it actually exists. It's the existence assertion. Does it actually exist? Is it real? Is it valid? Is it valid? Now, let's take a look at number 2. And those, by the way, these assertions are account receivable related assertions. Account receivable, when we say account receivable, remember the dual nature of accounting. Account receivable means also sales. Basically, we're looking at transactions and balances that deals with the sales and collection cycle. Ensure that disclosure related to sales are both relevant and easy to understand. Now we are dealing with disclosures, but specifically the disclosures about sales. Sales, is this an account balance or sales is a transaction? I hope you know that sales is a transaction. Sales are income statement, they are transaction. And we want to make sure that disclosure means what? The name of the assertion here is presentation. You are presenting the information about sales that are both relevant and easy to understand. What could be a typical disclosure? For example, if one of your clients represents 40% of your sales, you want to disclose this information. That's important. This is just an example of a disclosure. Verify that recorded sales transaction. This is basically kind of gave it up. It's a classes of transaction have actually occurred. So is it an account balance or a transaction? It is a transaction. Name of the assertion. Again, try to derive, understand that did it actually occur? The occurrence assertion. Did it actually occur? Confirm there are no liens or other restriction on account receivable. Well, accounts receivable, balance sheet, account balances. Well, what are we looking at here? When you have a lien on your account receivable, it means you don't really own this account receivable. There's a lien against it, a claim by someone. Well, we're dealing here with rights and obligation. Do you have rights to the account receivable? Rights and obligation assertion. Ascertain, make sure that all sales transaction, again, we're dealing with transaction, has been recorded. Making sure all has been recorded. It's a transaction, and all means completeness. Name of the assertion is that we recorded all the transaction. This exercise, I would say it's leading you to the correct answer. So if you are comfortable with this exercise, with this simulation, it means you have a really strong basic understanding. Now we can take this simulation and work another one, but you want to make sure you are comfortable with this. And if you find it easy, that's great. I'm happy for you. But I believe it's very beneficial. Check that receivables are appropriately classified as trade or other receivable in the financial statement and that they are clearly described. Again, Is this an account balance we're dealing with, or a transaction? Account balances. What are we dealing with here? Classification, classifying, presenting the information properly. Whether the receivable, we could have a trade receivable. Trade receivable means it's a receivable that is generated from the selling of the services and product of the business versus other receivable. Other receivable, you could have other receivable like you file your income tax return and you are waiting for the government to issue you a refund. That's other receivable. Or you might lend one of your employees or executives some money and you're waiting for them to pay it back. Regardless, what we are making sure is the receivable are properly presented. The trade versus non-trade, which is other than trade. Verify that sales transaction, again, sales transaction, has been recorded in the correct period, correct accounting period. We're looking at classes of transaction, and here we're looking at the cutoff. Proper period means, is it in period 1 or is it in period 2? So basically, remember, the life of the accounting, the life of a company is separated into artificial life. Like we have year 1, we have year 2. We don't want to bring any sales from year 1 to year 2 or vice versa, year 2 to year 1. We want to have the proper cutoff, and the assertion is the cutoff assertion. Let's take a look at additional assertions or management assertions. Confirm that account receivable, again, it's account balance transaction, are recorded at the correct monetary amount. So notice the difference here. He said we make sure that, let's see, where is receivable? So I can just compare and contrast. Confirm that account receivable actually exists. The first one, if you notice, it actually exists. That's fine. Here, it's existence. Here, what we're making sure it's at the correct amount. At the correct amount, we're dealing with a different assertion. Amount means what? It's valuation, accuracy, allocated the proper amount. So these are the assertion when we're dealing with the correct amount. Usually, you will know about it as a valuation, but the accuracy as well is correct here. Ensure that sales transaction, classes of transaction, has been recorded in the appropriate customer account. So again, classes of transaction, appropriate customer account, it means it's classified in the proper place. Classification. Check that all required disclosures about receivable has been included in the financial statement. Now, we're dealing with account receivable, account balances, and we're dealing with what type of assertion? Disclosure. It means presentation. Now, also we can do here, since all is there, we could also add completeness because we want to make sure that all has been included. Make sure, ascertain that all account receivable, account balances has been recorded in the books. Here, account balances, all has been recorded in the books, completeness, all of them. Confirm that the disclosures related to receivable, account balances are presented at the correct amount. So they are all been presented at the correct amount in the financial statement. But here we're dealing with what? We're dealing with disclosure. When we deal with disclosure, it's presentation. Now I mentioned here completeness, but it's really presentation because disclosure deals with presentation. Verify that sales transaction, classes of transaction, has been recorded at the correct amount. So it's a transaction, correct amount is accuracy, valuation, but for the classes of transaction, the correct one is accuracy. But you understand, we're looking at the proper amount. What should you do now? Go to Farhat Lectures, look at additional exercises like this one, quasi CPA simulations, multiple choice, true, false. That's going to help you understand management assertions, or known as management audit assertions. It doesn't matter. Management assertion is an important topic on the CPA exam as well as your accounting courses. Shortly, we're going to take those assertions and collect evidence that meets the management assertions. So that's why it's important to understand them at the basic level. Important topic, management assertion. Good luck, study hard, and of course, stay safe.